Insurance is not savings purely. Insurance comes in three forms: savings, protection, as well as investment. So it depends on the policy you pick. Have you picked the one that gives you both or all the three?
Welcome back to the Social Spotlight podcast, where we discuss everything finance, investment, business growth, and current affairs. And you know how we do it. Always bringing insight, always bringing information. And in this particular episode, we get to discuss life insurance. The reality seems to be quite different. On this segment, we host an expert, Miss Caroline Amase, who will break down everything we need to know about life insurance. Welcome, Caro, to the show.
Hello, everyone. I'm glad to be here today. I'm Caroline Mary Amase, and commonly known as Finance Bestie on many other platforms. And of course, I preach the gospel of managing money well. My background in insurance begins with my expertise in financial education. And as a financial literacy expert, I found insurance being one of our chapters in financial literacy as one of those common areas where so many people seek clarity. They don't know what it's all about. They wonder whether it's really necessary. And I find it very interesting to make everyone understand it and also bring that easy access to the insurance services to the many more, as I try to impact many lives in the financial literacy space. So basically, for things around managing money well, things around making wise investment decisions, what to do for key aspects in life like emergency funds, I'm available for all those questions and all those concerns around there. If you're looking for that finance bestie, you're looking for that partner. I know it's very easy for us to have prayer partners, right?
Yeah.
Yeah, we have a prayer partner, but it's so hard, and it's very few that are always intentional about having something to do, like maybe a financial warfare partner. And this is where Finance Bestie comes in, to hold your hand and to ensure that some of those concerns, some of those struggles that you suffer with inside, and many times you even fear to share with a sister or a brother, maybe a big financial mistake, that's where I come in to see that you can redesign your financial journey. The whole Finance Bestie is still something that is emerging. And like you know, Ugandans, we are literally very reluctant when it comes to financial education. But when it comes to things that excite us, maybe outings, we feel that it's something that I can invest in. But personal development, we really still need to do a lot of awareness creation, that your financial journey all rotates around you being intentional on deliberately learning on maybe areas that you're struggling with. If I'm struggling with maybe a loan, what can I do? Who can I talk to? And this is where the financial advisory comes in. Yeah, because many times we do things just because Vivian said she saves money with this institution, I'm also going to save there. But I've not yet asked an expert, maybe what should I look out for?
Absolutely.
Yes, if I want maybe to save, if I want to get a loan, if I'm talking about insurance, is it just saving or it's beyond you being able to save money?
Quite interesting. So at what point does life insurance come into your life or into your CV?
Okay. There was a time when I had a group of women, and most of these women had issues around school fees. and many of them were single parents or women raising children on their own. And many of them had issues around school fees for my child, issues around I'm struggling with debt. And much as I have this debt, it doesn't mean that the school fees issue is going to wait.
Sure.
Yeah. So as a financial literacy trainer, I looked at how do I help these women? Which other financial instruments are there that can come in handy for them to be able to make better plans in terms of financial planning. And this is where the insurance aspect came in, and having many products designed, especially with the company that I work with, Prudential. There are so many products that were designed for various reasons, for various needs. All of them have significant features that can really come in handy for you who is looking at a long-term goal, for someone who is looking at school fees, for someone who's looking at investment. However, how I got in is bringing in other financial instruments into a space to address an area that many women were struggling with. Yeah, and that's how now I brought in the aspect of saving for school fees, that if really taken on early, you see these things where you have a child and the child is growing, and we can all agree that when you look at the education system in Uganda, when you look at maybe P1 to P7, there is a range of school fees that's widely expected.
Yes.
When you also look at maybe from S1 to S6, we still know that if I'm to take my child to a modest school, I need to have about maybe 1 million to 1.5 for the next 6 years. Still, when you go to the university, we all know that I need to have about maybe 2.5 a semester. That makes it maybe 5 million. That is modest. And that is about 15 or 20 million. So how the insurance comes in for these ladies is the fact that the ladies sit down and look at how many more years do I have to deal with school fees. If my child is going to be in S1 in the next 6 years, how much money do I need to save? How many years are those? How many months are those? And how much am I saving every month? Or how much am I saving every day, depending on their income cycle?
Okay.
So basically, that's how I came into bridging the gap, and also to create awareness around good financial planning, especially for the women I was dealing with. But when it comes to insurance, I don't want to say that it's basically for the women or for people with dependents, but for everyone generally. Yes.
Interesting. When you speak, how you sound so passionate when you speak about insurance, but also it gets me wondering, maybe just to also ask you, for you to clarify, why do most Ugandans think about insurance when things have already gone bad?
That is very true. And you find that in Uganda, there's still a reactive culture. We tend to wait for something to happen before now we think about the consequences. But it has already happened.
True.
So we are still in that culture where we are waiting for something to happen. And we hope that when it happens, we shall figure out a solution there and then, which is very different for insurance, especially that it covers very key areas such as permanent total disability, areas like death, areas like sometimes you find people going through accidents. I mean, if an accident has happened, what are you going to fix there?
Right?
You know? So in Uganda, we are still stuck to the reactive culture, but also there's a lot of this thinking that it's not going to happen to me.
Yeah.
And sometimes we even justify it with Bible scriptures, we justify it with many proverbs. That what you think is what happens, something like that. But when you look at the real life circumstances, usually it's not a matter of if that thing is going to happen, but a matter of when it happens.
It happened.
Because eventually that something will happen, And when it comes at a time when you don't have insurance, you don't have any shock absorber. You're just by yourself. So generally why Ugandans struggle is because of the reactive, that culture where you're waiting for something to happen. We are also thinking all the time that it's not happening to me. But also we still need to do a lot of awareness creation, enabling people to understand what is insurance. Sometimes when people have decided to take on insurance, you'll find that in Uganda, people are so lazy at reading.
That's true.
You've seen people go to the bank to get the loan, and someone has something like that, and all they tell them is they put stars and they tell them sign here, sign here,
Yes.
sign here.
You don't even know what you're signing
You
for.
don't even know what you're signing, but you're desperate to
Yes.
fill and get that loan. The same thing happens with insurance. You're desperate to fill in, and because maybe Vivian said, me, I have an insurance policy with Prudential or with this company X, even me, I want it. So I'm so eager to sign, but I've not understood the exclusions. I've not understood the covers, and I'm eagerly signing up for something that I don't understand. Then later on, yes, I've saved. Maybe along the way, I've gotten challenges, I've skipped some months, or maybe I've gotten a problem, and that problem cannot be covered by the arrangement that I took on. And that is when you'll hear all those stories around insurance doesn't pay, insurance doesn't, it's not real, insurance is a scam. We've heard all those things being said, but it starts with the two parties, the client and the financial advisor. You need to understand yourselves before someone actually signs and takes on the insurance policy.
As an insurance service provider, don't you think you're at fault for not informing your client better? Because, well, you know this person is probably not going to read all this information. Do you or your other people go ahead to highlight clearly, or you wait for them to learn the hard way?
As an insurance advisor, we sit down the client, take them through the terms and conditions, what is being covered here, take them through everything. But again, like I said earlier, just the same way we don't mind so much about reading and understanding the terms and conditions in that document. Even when you try to explain to someone who has already made up their mind, that person will not listen.
I know.
Sometimes you meet a client who tells you that my sister has it, my sister saved for 5 years, and maybe after 5 years my sister got money. I know it works, just give me forms I sign.
Oh, wow.
And then you assume that probably the sister took them through. Yeah, but really the insurance advisors are trained, and we give the information that is required, and we also feel better when people even ask more questions, because a client who understands what they're taking on are at a better position to even recommend you for
True, I would think
new business.
I would think so. But is insurance really for everyone though, or it's for those with dependents only?
Okay. Now, there are so many misconceptions around insurance. You find someone maybe in Chikubo, maybe a primary teacher or a secondary teacher, thinking that insurance is not for everyone. And sometimes there's this tendency to think that someone needs to earn more before they can have the insurance arrangement. We also think that maybe I'm still poor. Have you met these people who feel that they are too poor to save?
Yes.
There are so many, they say, I'm still poor.
The majority.
Yes, and I don't have enough. What am I even insuring? I don't even have property. But insurance, ideally, is not about who, or it's not about your age. As long as someone is 18 years and above, and you've started earning some income, and maybe you have some responsibilities, but even if you don't have responsibilities, in case of permanent total disability or in case of an accident, are you confident that your spouse or your family is going to take care of you until?
I hear you.
Someone who wants to be able to absorb some of those life uncertainties as and when they come up. So it's not defined by maybe status, it's not defined by caliber, or maybe because I have children. Everyone needs insurance. All we need to know is that insurance is a risk and protection strategy. And these risks, every now and then, of course, will arise. Everyone faces the many risks that come in.
Interesting. School fees, loans, and even daily expenses already take up, most people's income. Where does life insurance fit in?
We will all agree that sometimes there's a bit of financial crisis in everyone's life.
True.
And many people end up in a position where they're just on survival mode. Those things where you're just surviving.
I think 90% of Ugandans are currently on survival mode.
We'll be on survival mode. We tend to think that insurance is not a priority. Once we master on how to cater for the eventualities and other savings goals in our financial plans, we shall have insurance sorted without feeling any pinch. Now, usually when the money comes in, of course, we have those many things that we want to do.
Yeah.
I'm sure many of you have heard about the 50-30-20 budgeting rule.
Yeah.
So earlier on, you talked about school fees, expenses, and all that. Yeah, once you have your systems, like now the 50-30-20 budgeting rule in place, this will give you an opportunity to actually cater for everything, including that insurance. Well, the 50% may take all your needs, and that's where you'll find the rent and all the things that you've mentioned. 30% we assume that should cater for wants. 20% we assume that should cater for savings goals. So for everyone, while you make your budget under those savings goals, what are those goals, right? You'll find that under those goals, you might have debt repayment, you might have maybe investment, you might also have insurance, because one thing for sure is that without that emergency fund or that safety net, you are going to go back to borrowing. Something has happened, you don't have anything that's going to come in for you, automatically you're going back to borrow.
Sure.
Yeah, so what am I trying to say? Is that as we are doing our financial plans, as we are budgeting, in fact, after your tithe, that is also depending on your relationship with your God. Because when you talk about things like tithe, you'll find that it's a very critical issue. So after your tithe, as you're making your budget, under your expenses, this is after you've listed all your income, you've understood where the money is coming from. This side, as you're looking at your 50-30-20, after your tithe, it's important that we normalize savings as an item in our budget. And among the savings goals, the emergency fund should be catered for. And that is exactly where you find life insurance.
I love that you mention not waiting until you have so much to actually start saving. That makes me wonder how much in life insurance cover does an average Ugandan actually need?
When you look at life insurance, we are thinking beyond basic emergencies.
Yeah.
We are thinking beyond this basic thing of someone has malaria, it's a minor car, maybe repair. We are thinking beyond minor emergencies. We are looking at a major crisis. And by a major crisis, I'm meaning something like death, permanent total disability, where you, the engine that has been making that money, you, the machine, the breadwinner, you're unable to make the money. We are also looking at circumstances of death. You are normal. And because you're normal, it doesn't mean that the bills are going to stop. It doesn't mean that the children are not going to study. It doesn't mean that your creditors, if you had a loan, are not going to come for their loan repayment. Everything has to continue the way it was. So now back to your question, how much is ideal? If you're looking at basic emergencies, we are looking at between 3 to 6 months worth your living expenses. But if you're looking at a major crisis, we are talking about 5 to 10 years of your annual income.
Okay.
So that means that as we are doing these policies, we are thinking beyond. I'm looking at 10 years from now, that if something happened to me now, maybe I have died, is my family able to live the same lifestyle? Are my children able to go to school, the same schools, maybe for the next 10 years, as they recover from that shock, or as they figure out what next if the breadwinner is not there? So looking at annual revenue, if an ordinary Ugandan is earning 1 million a month, it means that annual, that's about 12 M.
Yeah.
So that is about 120 million for the next 10 years.
Wow.
So you remember what I said earlier, that when I sit down with various groups of people, I ask them, how much money do you want to have in the next 10 years or in the next 5 years? So that will give you a plan. If my living expenses is worth 120 million in the next 10 years, I'm looking at 10 years if I'm not there, right? So how much am I going to save monthly? That's how you come back to your premium. So many of us are going to, of course, say the usual way that we always say, that but if I'm earning 1 million and you're telling me that I need 120 in 10 years and I'm earning 1 million, does that mean that I have to save the entire 1 million? Maybe not. So sometimes the issues that we struggle with in life may not really rotate around our spending habits. There are times when you've done your budgets, like the way we said, you followed it. It has refused to math. I've done it.
The math is not mathing.
It's not mathing. Like you've counted everything. You have restricted all the wants. You're really living a modest life. But
survival mode.
Survival mode. But things are not just working out.
Yeah, I get
so
you.
What does that tell you? It tells you that it's high time now you get another income source. Because now the one is not sufficient.
Yeah.
So that's when you go back to look at your skills, look at your experiences, look at everything that you're passionate about. And while maintaining maybe your main income source, what else can you do to beef up? Of course, there's a tendency also for many of us to think sometimes that I'm still young. Like you said, I'm still young, I don't have any kids, I don't have. But I want us to accept that the benefits that come with insurance favor you even when you're younger. So the earlier the better.
How so?
Because when I look at Carol, who is 19 years, and Vivian, who might be 35 years. Vivian at 35 years already is going through a lot, going through issues of maybe even hormonal imbalance and all that. There's responsibility.
True.
Your stress levels are higher than someone who is younger. So while the insurance companies are structuring your benefits, your bonuses and all that, even factors around the risks, insurance is not savings purely. Insurance comes in three forms: savings, protection, as well as investment. So it depends on the policy you pick. Have you picked the one that gives you both or all the three?
We have seen scenarios where someone could be in the same situation. They lose a job, but they may not have an alternative income and they just can't save. The willingness is there, but there is just nothing to save. Exactly, the ability is not there. So what happens to such a person? Does your money get deducted? Does it stay there? How do you claim it? Do you, I don't know. What happens in such a scenario?
My insurance company, Prudential, first of all, the number one thing to do in such a situation is to communicate with your insurer. Don't just keep quiet. Don't just go mute. And we stop seeing your deposits coming in and we are wondering, did this person die? What happened? So the number one thing to do is communicate with your insurer or with your financial advisor at that point and let them know that this and this has happened. I request that maybe my policy is put on hold for now. Because even if there's been a job loss, the very next step for everyone who really wishes to have their financial life in order is to look for another job. So once you've communicated on this side that I request that we hold on a bit, I mean, insurance companies are not maybe some sort of superpower that cannot understand that so and so is going through this. However, if maybe you had saved for 3 years and the person is just not able to continue, there's still an arrangement where the person takes some of that money, not all of it.
What do you mean some? It is my money.
It is your money, but we know that insurance is a contract, right? And once you sign a contract and you reach in between there and you're trying to pull out, there's a breach of contract. And many times, any contract that is being breached comes with a penalty.
Okay.
I mean, yes, when we give our money to these insurance companies, they also don't keep it idle. They also invest it in other instruments that is going to give you the bonuses that we've promised you. So in the middle,
that's why people get the extra money.
So in the middle of the 5 years, because inside here for us, we know that Vivian is saving with us for the next 10 years or for the next 5 years. And probably we put our money maybe in a bond, maybe in a 10-year bond, right?
Okay.
So in 3 years, you want us to give you back your money. It means that we are going to try also other means or get that money from elsewhere that will also come with other costs.
But you people should be flexible. Look, hear me out. When I lose my job, you expect me to figure it out. But now for you, you don't want to listen to me. Like, I have reached a point and I am tired. I just don't want to continue. Why don't you want to give me my money the way it is?
Okay.
You know how hard it is to make money in Kampala?
Yes, it's very hard to make money. We know that very well. I want us to look at the business angle of it. The insurance company sent you a financial advisor who came to you. That person spent transport. The person spent airtime following up with you. Every month, this person is following up with you. How are you? This is your current financial position. You've accumulated this much for the next maybe 18 months. All those costs are being facilitated by funds. And for us to be able to do that, we needed to have had your money invested somewhere longer. But now in between the journey, you're telling us that you're pulling out from the arrangement. That's basically why if you take out your money before maturity, it may not come 100% as what you had saved before.
Quite unfair, but okay. In your area of expertise, what have been some of the most common mistakes people have made when trying to choose a policy?
Now, like I said earlier, some people may take on policies simply because someone else has taken it. Someone has EduSave because my sister has EduSave. Much as I may not really have, you know, when you hear EduSave, we are thinking about school fees.
Yeah.
Much as it's also a wealth building policy.
Oh.
However,
new information.
Yes, it's a wealth building policy. I mean, if I don't have a child and I've taken on EduSave after that given period of time, if I'm looking at long-term goals like maybe buying land, if I'm looking at maybe capital, if generally I'm building my wealth, I'm saving, I'm being protected, and I have investments. Now, sometimes there's a tendency to save money, leaving the whole insurance arrangement or the whole insurance premium amount to your will, what you desire to save, not really what you should save based on your value and based on what your family would need in the event that you're not there.
Okay.
Now, I want us to look at a scenario where I earn 3 million. By the fact that I earn 3 million, it means that it might mean that my usual lifestyle or my usual monthly expenses might stretch maybe up to 1.5 or 2 million, depending on my lifestyle and the standards of living that I live by. And here you find someone in that caliber opting to only save 100K. What can 100,000?
You people promise to multiply the money, no?
No, but what can 100,000 do for you in the event that you're not there you're not there maybe, and your family is trying to figure out life for the next 10 years as they stabilize from the shock. So many times people save amounts, not what they should look at, like not really what they need. We just leave the savings journey to our desire. Maybe we look at 100,000 like, let me just put that 100K there. But in case of any eventuality, is the 100K sufficient, really, to take care of maybe your children who are going to schools of maybe 1M? So that's one of the mistakes people do. They just save amounts that they want, not looking at amounts when cumulatively, like multiplied, is commensurate to what we talked about, the 5 to 10 years of annual expenses. So that is one of the biggest mistakes people make. I'll save 100 because Vivian is saving 100, or because it's easy for me to save 100.
So as insurance advisors, what are you doing to reduce on such ignorance?
When we are having insurance conversations with our clients, number one, we ask you, what is your goal? First of all, we push them to make SMART goals. Goals that are specific, measurable, attainable, realistic, and time-bound.
Okay.
That's why you see that most of our policies are structured in years. Like in the next 5 years, that's already time-bound.
Yeah.
How much do I want? Specific. Measurable in a way that, how am I going to be saving? Is it monthly, quarterly, annual, or semi-annual? So we are still, and then we also go ahead to ask you that, how much do you earn? So we start with the goal and the amount. So if you tell me that you want to save 100,000 monthly, I'll ask you, how much money do you want to have saved in the next 5 years?
One thing that really beats my understanding is families still go ahead and, hold emergency fundraisers in case of emergencies. Yeah. Why is that?
We have issues around mindset. Do we agree that many people, when they hear insurance, one thing comes to their mind, death?
Yes. And I am some people.
So one thing will come to your mind, death. And once you've already trained your mind to think that way, when an insurance advisor like me approaches you and I start talking you into insurance conversations, you begin thinking that, when I'm going to sign this, I'm going to die. And because of that mindset, you're never going to take on that insurance policy. And if anything happens to you, the first thing that any family thinks about is to call everyone, because there has been no preparation.
True.
From the beginning.
True. We
don't understand insurance as protection and issues around that. We're just looking at death only. But also families many times have failed to come together. Insurance companies like Prudential have come up with packages that have a component of group insurance, where you'll find that maybe in my family and my extended family, we have a package and everyone therein is insured, that if member so and so died, this is what the insurance company covers. The family gets this money for burial and all that. But you'll find that families, many people, first of all, families are disorganized. All families do is many times is conflicts and all that.
Yeah.
And the only time they want to meet is when there's a burial, of course, which burial is going to call them to contribute money, which they will do with a lot of lamenting and all that. So issues rotate around a mindset. It still also covers what I earlier on said. We want something to happen before we start thinking that I can actually die. The other thing of thinking it can't happen to me.
I know.
Yes.
Wow.
So mindset is very important when it comes to the adoption and the embracing of insurance services. What is being done is that the financial advisors that are preaching the gospel of insurance are really trained so that they are able to make even the commonest person understand what insurance is. There are foot soldiers like me who are reaching out to the public and making sure that people understand it. But also, my coming there means that you can access the insurance services through me. Yes.
Interesting. What does somebody who is totally new to life insurance, what do they need to get started?
Number one, identify a financial advisor that you are confident in. But as you identify that financial advisor, it's also important that on your own, do research. Now, there is Google, and many of us, ChatGPT and all that, and many of us spend a lot of time researching other things that may not even be relevant, right?
True.
So this is something that you can, for example, do your research on it. How many companies in Uganda are offering life insurance? It will give you a list. Do research on each. Just because I've said that I'm coming from Prudential doesn't mean that that should be your go area. But as and when anyone is ready, I'm available to support you. Start and take on your insurance journey. So number one, do your research. But at the point when you want to sign up, understand all the terms and conditions, because it saves you a lot. In the beginning here, when you understand, ask questions. Like we said, in the event that I'm not earning anymore, what happens? In the event that maybe I'm earning, but financial pressures are on me and I'm stuck, and maybe I want to get back my money, what happens? Because it saves a lot other than you signing up. And then later on, I'll tell you that if you're taking back your money before maturity, this and this. So it's important, identify a financial advisor, look out for the financial or the insurance service providers, get all the information you require, and then get started. And the best time to start is now, because anytime anything is going to happen to you, and you won't have a fallback position. Yeah.
Where does this leave the people in the gig economy, who are, by the way, the largest of the youth? How does someone who survives on maybe invoice to invoice or gig to gig sustain life insurance? Because you mentioned penalties, and these are things which are not consistent.
Yes.
It could be today, then 3 months later you get, so they, like, the willingness is there, but just the resources cannot allow me to.
Okay. Not because we want, but because of many issues beyond us, like unemployment. It takes you back to being intentional.
Okay.
Yeah, being intentional. If I have made a decision that I'm taking on insurance, and this is how much I want to save monthly, the insurance payment terms are very flexible. There are those that allow you to save monthly, quarterly, biannual, and annual. So I know that most of the entrepreneurs understand their earning pattern, right? So if I know that I survive on windfalls, that maybe I have this deal that is going to come through, maybe it will come through this month, that is when I structure my payment schedule to an arrangement that might favor me. If I'm not sure of a monthly income, I'll request the insurance company that, can I save biannual or can I save annual? So that as and when that big deal comes through, your priority, your number one item is covering up that insurance.
Okay, makes sense.
Yeah, and once we keep the communication with these insurance companies, we are not saying that if I've said monthly, that's going to be arrangement until, no. Because what if something changes in between there? So it goes back to how you manage your relationship with your insurance advisor and the insurance service provider. Are you in touch? Are you updating them on the changes as and when they come? So it goes back to communication and utilizing that windfall. Some of us, we think that the money that we should put aside for insurance only has to come from salary. It can be a bonus.
Right.
Like maybe I've gotten commission or bonus, and I just close my eyes and be like, all this bonus I'm going to deposit for the next 1 year.
Between you and I, there is no person who is going to get a bonus and think about life insurance.
Now it goes back to your goals.
Yeah.
It goes back to your goals. What makes sense to you? What do you value? everyone has goals.
I hear you.
Is having a safety net one of those goals? If yes, then as long as there is a will, there will always be a way.
What else does life insurance cover?
Now, death is just one of the major aspects that insurance covers. But the ideal thing that should stick to everyone's mind, everyone who's going to watch this video today, the ideal thing that should stick to your mind is guaranteed protection. Think about a shock absorber. Think about an emergency fund. Don't think about only death, because death is that extreme scenario where something can happen and of course you go. But even if you go still, I assure you that with life insurance, you have guaranteed protection for your loved ones in the event that you're not there. So basically, insurance is not about death, it's about guaranteed financial protection for your loved ones. When you're normal, when you cannot pay the school fees, the insurance is going to pay it for you.
Okay. If you were to compare life insurance with a household item, what would it be?
Life insurance, household item, I think I would compare insurance to salt.
Okay.
Because me and you, we know.
Like, we don't notice it, but we need it.
It's not there. Like, it's not something. We shall always say that, oh, I don't have soap, I don't have sugar, I don't have this. But no one mentions salt until it's not there. And when it's not there, you need it.
Absolutely.
So that is how I would view insurance. It's something that we may overlook, but as and when the eventuality comes through, you surely need it.
Wow. What are your parting shots? What should people, consider the most about life insurance?
Okay. So as we part, one of the things that we should get stuck to our mind is, first of all, that it's a matter of time. I am not a prophet of doom, but it's going to
Well, you sound like
happen.
one.
And you will need to have an insurance cover.
Yeah.
So life insurance is one of those things that should happen to you, because it's going to keep you protected. It's going to keep you in a place where you are confident that you can face tomorrow, for example, without that loved one. And even for us who are married, for example, if maybe you're with your spouse, you know that maybe if the other income source of my spouse is cut away, at least there's something that is going to come to beef up mine that is remaining. So insurance should be for everyone, whether married or not, wealthy or not. All of us need life insurance. And for us to be able to do this, and this one I'm calling upon everyone, we need to normalize budgeting for this in our savings docket. So among the many goals that you want to save for, as you're looking at that trip to
Maldives,
the trip
Tuscany,
to Miami and all that, remember that there are also those eventualities that may come up, and you will need something to come in for you to be able to absorb that shock.
Wow.
So for those of you who want to start, or who are looking at having a financial warfare partner or an accountability partner, I am available as your finance bestie for all those many questions that are confusing you about money and all aspects around insurance.
If you're watching this episode, I really hope you get to choose life insurance, because this is something that we all need. And like she mentions, never think it won't happen to you. But also, why do you have to wait for it to happen? Why do you have to wait for the worst, when you can just plan better, So hop on the life insurance board and let's start making better life decisions as young people, or even regardless, you may not be young, but no matter your age, start making smarter decisions. It's never too late, And like always, we really appreciate your company. Thank you for watching the Social Spotlight podcast. We love you. We love the support. We truly appreciate you. But guess what? There's one more thing you can do. You can subscribe, and also you can share this video to to your friends, to your family, and anybody that you feel would, benefit from knowing this information. I've been your host, V, and see you soon.